Yeah, the economist jobs reports for the 31st of July, the end of the month. And, some people are still digesting what the Fed did, which was nothing, but a lot more than nothing because, I think if Powell had been there, he probably would have increased rates. And we're looking at the euro, huge spike because, of course, this to the world is, proof the dollar is finished, yada, yada, nonsense talk. But it was a huge excitement for them because, uh, theoretically, with inflation and everything, the rates should have gone higher. Well, there's no room to move higher with rates, just from a practical standpoint from U.S. growth. And if the Fed is concerned about that over global concerns, then doing nothing was probably the best move. Lowering rates would have been probably a bit more of a help, but not going to happen under the climate that exists because, again, a lot of times they don't take into account this secondary issue. It didn't exist before. The service on the debt and deficits in that really have an impact now on growth, considering uh, growth is numerically tied to how much deficit spending is taking place. So service on that becomes crippling. So yeah, those are realities. Now, fine. What does that generally mean? You also had softer price increases. So from a consumer price index situation, there was no justification. I mean, empirically, it looks like it should rise, but it hasn't. And the interesting thing is, we're seeing, this excess supply of housing and stuff in some of the larger cities due to the immigration crackdown. So that was that counter deflationary effect. At the same time, you're having oil being the problem, and you're still in the mid range. So again, it's going to be this battle of, well, we make happy with Iran until we get prices back down, then we make unhappy with Iran, and just keep fighting that battle back and forth. So yeah, that's been the general approach from that standpoint. Is it working? And it's a different calculation. It doesn't really matter from that standpoint. The reality is what we're looking at is growth sustained, and does this help or hurt it? It doesn't really do a whole lot of anything. It just allows more absorption of it. Coming off of the big trail down, well, it's a net stability situation. So what we did was we just came back up over the positive extreme retrace level. Didn't quite get to the full retrace on the dip down below. And what you see here is that strong magenta rise. So short cover rally is exactly what that was. Orange dipping below. These are all classic, runs, and it's exactly what it did, and beautiful as it was. So there you see the same thing. Didn't quite reach the zero either from a ES standpoint, but now right back up to the 50%. So again, for all the fluster and bluster, you know, pretty close to dead even for the month. Because if this we go back here, this is our beginning of July configuration, and where was our open? 75.43. Oh, there you go. Just a few points off. So for all the trauma, not a whole lot really to talk about from that standpoint. So we look at it from the intraday, and we ended up with our big prior day on Wednesday, and then moving into Thursday. It was interesting because we ended up with these short spurts, stabilization, another short spurt, stabilization, and then we ended up with a fairly decent fade that goes through, and then we rebounded and did the same thing over again. But the numbers, when you start adding them up, just following the pink bar, get to be ridiculous. Now, when it comes to some of these up rallies, and then you get your intermittent, red zones in between, the reality is a lot of those can be offset because if you look at it from a steel standpoint, if you're under negative 7.5 when you get to these negative 13s, yes, it shows a red potential, but that really is just a reset for an upside move. So when you follow them along, what you're looking for is where you don't have steel dipping below that level. So these little softer areas that then see an upturn that it's expected. So when you get a move like over here where it's a little bit deeper drawdown, you can see that's because we were at negative 13 for most of it going through, and then boom, as soon as steel starts to pop back up, you're back into a new buy configuration, and boom, it goes. And here we are in the Asian session, fairly clean, but you can see these are old support and resistance levels that we had from before, and we're just kind of sandwiched in between it. So all it is algos bringing everything right back to the same price range. Nothing shocking from a 50K standpoint. Nice and clean as well. So we're within that same range, right up here. We tested it to the bottom just to see if there was any excess liquidity. You can see some of those hedge fund guys were playing some games, and some of them got caught with their pants down. This is where situationships, can have lasting impacts. You get some of these gurus, young guys who think that they can just, state what their positions are, and nobody's going to take the opposite side of that trade. They're mistaken. In this case, Ken Griffin came out on the upside of that one in a big way, and of course, miraculously, everything rebounds exactly after the fire sale. Yeah, that happens. When you try and overdo it, take too much leverage, you get burned. So these things happen. We turn to our weekly chart. Slide it over there. We had a weakness situation going there, and interestingly enough, we're going to end this week potentially with the rejection of shorts, rising gold, and the turn up of magenta. That would be a major turnaround because that would suggest we're going to break out to new highs. So keep that one, and then of course I still follow the SpaceX. Can't really move for a 15-minute chart. We just don't have enough data points at this particular stage. Still too young, but getting there. It's interesting to follow along because it is the next frontier, and just as you would follow, internet, AI, whatever. Um, Certainly is representative of what the thinking is broadly at this particular time. So for now, again, we're still waiting for actual data points and a question of whether or not Trump is going to return to his 2016 view of lower energy costs, or he's in this bravado now of, well, everyone's forced to come to America, and this is somehow going to cripple the EU or China. I just don't see that long term playing out. It certainly helps infrastructure wise to the Gulf of America and stuff, but the Venezuela thing is years off before they can redo infrastructure enough to be a significant impediment to the Middle East from an oil export standpoint. So we'll see how it goes. But at the end of the day, things are a mess, and the U.S. consumer still hasn't effectively absorbed all that's taken place over the last 5 years plus. So there's that. The market, though, still doing well because earnings are still representative of decent numbers. Though the factors getting up there, and again, it's not hard to see. We'll just play by the readings. So that's the long and the short of it for now. I hope everyone is excited for next month. The indicators will be going out, so we'll be all set for another run of it. It was pretty exciting so far. Trade well. Anything relevant goes on the team chat. Have a good one.